Since this is our inaugural blast, I thought I'd bring up a chart and give you a couple of the rules to the hillbilly trader. This is the S&P 500. If you don't know what the S&P 500 is, maybe you better go to the CME.com, www.cme.com. Take a little read. It helps us determine which way the market's going. There's also another thing we use, and that is the euro dollar. This is the euro dollar. We use it as a gauge also of which way the market's going to go, or DX. If you don't know what the euro dollar is, maybe you better read up a little bit on Forex. Now, the rules to the hillbilly trader. Our goal is to mock all gurus, and we mean guru like in Roo, the rats that run all along in Australia, and to show you how to make plays off the guru's back without getting the short end of the stick. To understand this, you have to understand 3 or 4 little tiny rules of charting that most of these gurus don't know what the hell they are. Support is an upward movement in price. A trend is the failure of support or resistance, and it's got red and blue bars. Look, blue bar, you're going up. Red bar, you're going down. If you've got a blue bar, you're trading above resistance. Simple as that. Momentum is the distance between pivots. What does that mean? Well, if we take this little drop down here, we can look at the distance between the drops to give us an idea of how far it's going to move. See this right here, and then to this next drop. Was the next drop very big? Nope, that tells you it's about done going down. It's the speed at which it approaches something. Now, to understand how the hillbilly works, you have to understand delta. This is a little bit of an option puzzle. I could recommend a few books, some basic books, some advanced books. A basic book would be Guy Cohen's Bible of Option Trading. Intermediate book would be Sheldon Nattenberg's Option and Volatility Pricing. Probably the best, though, 27 pages on options ever written, was a guy named Michael Catalico. He's a pretty bright guy. He's a good read. I would converse with him online, but I'm a hillbilly and I can't write worth shit. So I tried to talk to him once online and he blew me off because I needed some help spelling. All right, so delta, you might want to read one of those books if you don't know what this is. If I own 100 shares of stock and the stock rises $1, I make $100. If I own a call with a delta of 1 and the stock rises $1, I make $100. So if I have an option or stock and it goes up $1, I make $1. If I own 90 shares of stock and the stock rises $1, I make $90. If I own a call with a delta of 0.90, the stock rises, I make $90. So here's what I like. Here's what the hillbilly likes. The hillbilly does not use stops. He uses synthetic stops. The hillbilly uses all kinds of software, some good, some bad, some just plain shitty. The hillbilly likes bourbon, Ron Paul, potatoes, and Red Bull. The hillbilly likes to go long commodities most of the time and short the service sector stocks. The hillbilly trades everything except for bonds, and the hillbilly doesn't like goats. So with that said, what do we think is going to happen next week? Now, I don't have a big, strong opinion on the market next week. I think we could come back down into these fib zones, probably most likely because of the lovely Tea Party Republicans. We're probably going to retrace right down into this zone someplace. Okay? Now, why would I say the Tea Party Republicans will cause the market to go down? If they don't raise the debt ceiling, the dollar will increase. Woohoo! If the dollar increases, the euro goes down. What's the likelihood that these incumbents raise the debt ceiling? Not very high. So we got a target on the euro down into here over the next few months. Also, there's some things that you should probably know. It has to do with seasonality and the euro. If we look at this and we say, computer, we just want to check the end of June. We're going to put in a few months in here. Let's just check them out. We're just going to go into Metastock, which is one of the software packages we use. And we're just going to say Tea Party. So what we want to do is we're going to put in here, the DEV means development. What month is earnings reports off of? We're going to say earnings reports are in January. Earnings reports are in April. So Nope, we don't do January. It's 1. Okay, month, and this would equal 4, and June would equal, let's see, June is the 6th month, and then they come out again in October if I remember right. Can't have and, that's got to be or we want to know when October is. October's the 10th month, so the month equals 10. Not 19 months in the year, 10. Okay, so let's bring this up. We're just going to check something out. Now, this is a currency. Look, right here, we're going to come over, and look what happened right at the end of this earnings season. There was a reversal. So between these two earnings seasons right here, the currency went up. Currency goes up, the stock market goes up, because this is the euro dollar. Our stock market rises. If our stock market rises in value, it's because exports are going pretty good. Well, what do these companies do? They banked all their money in the euro dollar, and we can actually Google that. I saw this article online the other day. We could actually grab that, take a peek at it. Let's wait until our computer catches up here. No, I'm not a Tampa Bay fan, but one of my clients, I thought he deserved a shark bite, so I sent him a picture. Okay, so what we want to look at is S&P 500 companies. S&P 500 companies. Oh, damn it. See, I told you I couldn't type. Let's wait for the computer to catch up. Okay, come on, S&P 500 companies. It's just giving me a fit. S&P 500 companies. Now we want to see currency gains. Currency gains. All right? We want to see the currency gains. Now, we want to actually notice this. There's an article in here, and we want to see that most of the gains of these currencies, and maybe we'll have to find it next week or next time we post one, it shows that most of these have currency earnings, currencies and earnings. Let's try that. Currencies and earnings. Weaker dollar means higher S&P earnings. The big move of the dollar will impact reported revenue earnings of the S&P 500 companies. This is a big thing. So currencies, the S&P beat the street because of what happens with their currencies, but they repatriate these currencies. You might want to read about it. We didn't find the best article, but it goes up. As soon as the earnings season's over, it reverses. Okay, so right here, the earnings season was over. We got a quick reversal in the currency. Okay, right here, the earnings season was over. And let's go back in here. And you had 3 or 4 more days up, but then a huge reversal in there. Now, let's actually get this over to the end of the currency. It's right there, the end of the month. 1, 2, 3 days up, and then a big reversal. After the earnings report, the currencies reverse. Why is that important, and why do we even give a damn? Well, look, if we bring up our lovely S&P 500 chart, and we throw these two over them, overlay without a scale. Okay, let's look at this. Now, I shouldn't have left that drawing tools on there, but needless to say, if the S&P goes up for the most time, you are going to be looking at a reversal. If the currency is going up, the S&P will go up, as a rule of thumb. Okay, as a rule of thumb, they'll both go up together. So right here they diverged, but you're looking at right here it goes up, here it goes down, here it goes up, here it goes down, at least over the last little bit. As a rule of thumb, just a rule of thumb, we'll be watching the currencies to tell us which direction that we think things are going to go. And for the most part, they'll stay in sync. Here's a drop off, here's a rise, here's a drop off, here's a rise, here's a drop off, here's a rise. They came out of sync a little bit right here, but for the most part, they'll stay in sync. This one was pretty close to right on right through here. So we're going to look as a leading indicator of the currencies. Every time we pull something up, we're going to mock them on the currency. Now, we got one other dirty little trick we look at. We look at the VIX. And I told you I use lots of different software packages. Let's pull this over here, go to chart. Let's pop this on here, and let's look at the VIX. This is the dollar index. Dollar index. If dollar index is down, stock market will be up on Monday. But we have to look in the morning. Let's look at the VIX. Okay, there's so damn many symbols in here. They just want to confuse an old man. VIX is low. It's time to go. VIX is pretty low. Better be getting ready for a whooping. Sell in May and go away. Don't listen to Cramer. So when we find a Cramer broadcast, we'll see what we can do to go in there and get us another trade set up. All right, with that said, the Hillbilly's out tonight.